So now I want to go into the yield system, right? So if you're a holder of KVTs at the moment, I assume you've done your research already. And this is something that is so unique about what we're doing. And it's something that we're all very proud of, because it really tests, it's something revolutionary, I think, as far as getting money moving. Where our name comes from, kinesis, Greek name for movement, right? I like the biological meaning, undirectional movement from stimulus. All right, so this differs from our current fractional banking system and fiat monetary system. I mean, money gets created by central banks. It gets then basically brought through the commercial banks and then lent out. You take away all debt, then you have no money ultimately. So it goes out through the banks and it comes back through the banks. That's how it works. It's very, very directional. So what we're doing, we're allowing the average person to create their own money, ultimately. Kinesis gold coins, Kinesis silver coins. And they do that through our very unique, like, two-tier market system. So we have a primary market and we have a secondary market. The primary market is called Kinesis Currency Exchange, KCX. Now, the average person can go in and actually create their own currency by buying some Kinesis coins. As someone buys a Kinesis coin, they become what's called a minter. So this is where the minter yield comes from. So they're minting their own coin. They become a minter. When you buy it, it is automatically, without doing anything, it's emitted into your wallet in the blockchain. So it's then through to basically the secondary system. From there, you can either send, spend, or sell it, right? And in the secondary system, because Kinesis is a full monetary system, we're even developing and it's coming along very, very well, our own like blockchain-based cryptocurrency exchange. So within this exchange, it will facilitate basically conversion of other cryptocurrencies to Kinesis or Kinesis to fiat currency, and it'll be tied up to our like mobile banking system. We're about to even, we're putting together more deals in the mobile banking space. Nothing's going to stop us with putting together these deals. We're out there putting together more and more deals. If we started, I don't want to go off topic, but we started this thing with a lot of partnerships already in place, more partnerships than any other cryptocurrency provider or any other cryptocurrency business that I saw. We basically had most of our partnerships in place to roll this thing out. We didn't go out there with a white paper saying, this is what we want to do, give us enough money and we can, probably put it all together. We had everything all put together basically from day one. And that's the way that we like to do things here. That's the way I like to do things. But we continue to put together more and more deals will be announced, will be released. So with regards to the minter, yeah, so once it's in the secondary system, once you've minted your currency, you can then send, spend, or sell it within the system. Now, once you do that, then after you do that, you receive yield on what you actually sent or sold into the system once you offload it effectively. And as that increases, you then get a proportion of the transaction fees out of the system. So if, for example, you mint $50,000 of Kinesis gold coins and then you spend them, then ultimately what that means is you have $50,000 out there working for you, that you receive a proportion of the yields of the system. Now, for whoever brings money into KCX and buys as part of our ICO, which will come later in the year, for whoever participates in our pre-sale, they'll get 15% of a proportional share of 15% of the transaction fees of the system. Well, that's 15% of 20% of the system. Oh, no, sorry. No, I'm getting a little bit confused with KVTs there. Forget that. It's 15% of whatever's in the system. Post pre-sale, then it goes down to 5%. Now, you see, we need to balance these percentages correctly to make sure that money keeps on flowing through the system. So we don't want there to be an incentive to hoard. We want there to be incentive to spend. So this is why the minter yield is there. So yeah, there needs to be that incentive to continue to spend. Now, we also have what's called a depositor's yield. So for the smaller participant in the system who also might not want to be bothered with actually minting like the coins, then we have what's called a depositor's yield. And this is someone who just directly comes into the secondary market, might download, like an application on your phone, and you come into the secondary market and you buy KAU or KAG, the Kinesis gold and silver coins, through the system. And when you do that at an initial time, we want to be incentivizing your initial deposit, right? So we incentivize your initial deposit to buy. And so you'll actually be buying off our exchange, off our cryptocurrency exchange, where there's buyers and sellers waiting there for you effectively. Now you'll likely be buying from a minter, right? Because the minters, how they sell in the system, they can only put it on the offer side. They can't just be hitting the bid. That will create insanity in the market. Okay, we know a little bit about markets at Kinesis and ABX. And imagine, so I say send, spend, or sell. So, but imagine what a minter can do if you're just like, creating this currency and then hitting the bid, just dumping into the market, buy, sell, buy, sell, buy, sell, buy, sell, and just to create insanity all day. So what minters need to do, they just need to sit on the offer side of the market. So you put your offer up and say, okay, I've got these for sale. And what we want buyers to come, and buyers will come. Initially, we want to incentivize the depositors. So the depositors, we want to maximize your initial deposit, and you'll likely be buying from minters that they have their offers in the market. Also, there'll be designated market makers, but we want to give minters, obviously, minters, designated market makers are like Fine Metal Asia, who will have bids and offers in the market and ensuring at all times that there's liquidity. So you enter the market, that you can also get out of the market, and you can get out of the market very, very cost effectively. So there's a small bid-ask spread in the market. So with depositors, the yield will also initially be, hang on, sorry, I've got to bring this up. So 5%, I believe it is. Well, that's 5%. Anyway, it's in the blueprint. I wrote the blueprint and I can't even remember. I'll bring that up and I'll come back to it. And and then obviously also what I want to talk about is the holders yield. So with the holders yield, what that is doing is it's passive income. So you just buy Kinesis coins and you start receiving a yield. How? You're also getting a share of like the transaction fees out of the system. So there's no debt associated with it. Everyone says to me, oh, how are you getting a yield? Like, is it like debt based? Am I lending it out? What are you doing? Are you lending it out? Where's the yield coming from? No, that's where all of our brains have been conditioned to actually the only place to get a yield from. But what we've done with this monetary system, everyone shares in the success individually and collectively of the system. So the more monetary velocity that's in the system, then the greater the yield. The more that it's used as money So the more that I spend it, whether it be I send it through the blockchain or I use my debit card, which can be used in different regions all around the world, or whether whatever I do. If I might be a business, I might mint Kinesis coins and then send it to my employees. If I use it, then that's monetary velocity. So as it passes through the system, transaction fees are charged to the sender, and then basically from that transaction fee, the 0.45% that's charged, it's split up between the different market participants. And one of those market participants is the holder. So the holders receive 15%. Now that might sound high in comparison to minter, but the thing is, a minter, as you keep on selling and selling, that gets a higher and higher proportion. Most people actually spend a lot more money than what they have saved. So you can actually, build up what you have out there as far as money working for you a lot faster. And if presented with a situation where, do I spend, my US dollars or euro or Japanese yen or Mexican peso or whatever it may be, do I use that or do I use Kinesis? I don't get any benefit after I use my legal tender fiat currency. After I spend it, it's gone. I get no more benefit ever for it. But with Kinesis, after you spend it, you do get benefit. So which option am I going to choose? Will I choose US dollar, right? And other fiat currencies where I spend it and the benefit of that money is gone forever? Or do I choose Kinesis, where I spend it and I get more benefits? So it's my conviction, and I'm a monetary historian, that if there's the better option out there where you can actually get benefits on money if you use it, if you spend it, then why wouldn't you use Kinesis? And by then incentivizing people to actually spend it, then they will spend it. So, there's different theories on what our velocity rates will be. But the thing is, people are going to be using this thing for spending, because we're the only currency on planet Earth that offers a benefit after you spend it, right? So I know what I'm going to be using. I'm going to be using Kinesis, and I'm going to be spending as much as what I can through it, and trying to be spending as little as possible of any other currency. I don't want to use any other currency. I want to use Kinesis. So then what our challenge is to create an entire ecosystem, an entire monetary system, whereby you can do everything you need to do, from your home banking to your business banking, seamlessly through our system. And the more that you use our system, the more you're individually rewarded, and the more that the system overall collectively is rewarded. So, and this is something that I think is truly revolutionary, and it's up to us, and it's our challenge to educate everyone around the world about this. And I think that we've got our incentive scheme right to be able for this thing to go viral. We're only in our very, very early stages still. It's early stage. So So the holders yield, and this is why we need the holders yield. So think about what you can buy as an investment around the world that gives you a passive yield. And actually, there's only a few investment classes that give you a passive yield. And to be honest, none of them really look attractive at all. You've got stocks on the stock market that give you a dividend yield. I show the different dividend yields from around the world, like from stocks on the stock market. You've got obviously like bank deposits. So look at those. In Switzerland, still negative 0.75%. You've got obviously bonds as well. So debt, you've got debt. And then you've got rental property, whether you buy, an entire house or apartment block or whatever you want, or you buy like a unit trust or something like that that gives some kind of, you know, income, passive income. So it's like bank deposit, bonds, stocks, rental property. But now you've got Kinesis as well. You've got KAU, KAG, and any other currencies that we roll out as part of our currency suite. And this is something pretty big. So we're creating effectively a fourth asset class that provides passive yield. So what that does then, it provides a comparable passive yield to compete with the other asset classes. There's a fair bit of capital allocated to those other asset classes. Just look at what the market capitalization is of stock markets around the world, what bank deposits are, you know, what money's invested in government bonds, corporate bonds, and then what's in property. Rental property as an investment. And if we provide a comparable investment yield, of course, this is something that's variable. I can't tell you what the yield's going to be. And so that's why I give, you know, the different, we've given you like the different percentages based on different velocity. I'm confident that velocity will be high because, as I just mentioned, we're a better alternative to fiat currency. And fiat currency, you know, I've seen estimates that velocities, you know, like 35 to 40% for, you know, US dollar, and about the same for euro as well. So there's no reason why we can't be the same. In fact, I would contend that we probably should be higher. But, you know, best off assuming the lowest. Okay, I don't want people getting like expectations that it's going to be high or anything like that. And also, you know, we're going to have like an adoption curve. We're going to have an adoption period where it might start off like not so high, but then, you know, over time, it will get higher and higher and higher as more and more people come in. We'll do our best with the resources that we have to push this out to the masses. But we can't expect to boil the ocean overnight. It's going to take time. And I want everyone to, you know, just have their expectations realistic as well about everything as well. We're going to do the best that we can. We think that we're on a winner here. But, you know, it's going to take time. And, you know, we want to do this right. I prefer the organic growth sort of strategy rather than trying to come out and do some big bang boom. You know, we're changing the world forever. You've got to participate now or never. No, this is something that it'll take time, and it's. I want everyone to understand that. So moving on. Look. Let me just pull up some of these yields. I'll get there, but the next yield is a recruiter yield. Now, this is a yield designed for certainly rewarding individual participation as far as spreading the word of Kinesis, getting like friends and family involved in the system. And by doing so, you increase the size of the system. All right, so this is just a referral-based situation whereby you refer someone in, but when you do that, you receive a share of their transaction fees forever while they exist in the system. So say if you bring your mother or your father or your friend in, then and they, you know, sign up with a wallet and sign up with an account on our cryptocurrency exchange, then you'll receive a share of their transaction fees forever while they actually participate in the system. So that means that everyone's actually incentivized to bring more and more people into the system, and they benefit from it individually, and the system benefits collectively. And this creates like the viral side of it. This is how, you know, like I think that will reach like a critical mass and it'll start to snowball. And after we get over this big sort of marketing, sales, PR push, then this thing will start to move by itself. these things will start to roll by itself as more and more people come in, and then our role will become more and more educational. We'll continue to educate the people, educate the masses to understand the benefits and equip them with all the tools necessary to keep on spreading the word about Kinesis, to keep it growing and growing and growing. The most important thing is that we get the system right, because systems are the most powerful thing in all of the world. We're born into systems. Systems program the way that we think, what is right and what is wrong, what is fair and what isn't fair. So it's really important that we get this system right from day one. But with regards to the yields, the sharing of the transaction fees, it's very important that they're set in a way that keep the money moving. So I'll tell you from the outset right now that we'll also be keeping an eye on whether these fee sharing ratios, whether they're working as far as keeping the money moving throughout the system. We've put a lot of thought into it, and we think that they're set at the right level. It's my conviction that they are set at the right level to keep the money moving. But if for whatever reason it's facilitating hoarding, which I can't envisage, then we might need to lower the holding fee sharing ratio and increasing, let's say, the minting ratio. But never will we ever mitigate the overall what's shared with the community. There might be just some adjustments, even though I don't think it will ever happen. There might be some adjustments to one to add to another, but I don't envisage that ever happening. But just so you know, it's designed in a way to keep the money moving and to keep the system increasing in size, getting bigger and bigger and bigger, and all by itself. And ultimately, it's a system that I think should be able to effectively govern itself. I mean, that's the beauty of a system, ultimately. And as I said, I think our role is going to become more educational over time. And yeah, that's really it. And we'll continue to do our strategic deals. We'll be, as a monetary system, you can almost plug any kind of business into it, or any kind of organization, and do any kind of partnership or with any kind of platform or anything. So we'll continue with the strategic partnerships, plugging everything in, as many things as we can. Obviously, there's the commercial center there as well, which this will be, like goods and services providers, merchants, plugged directly into the Kinesis system, whereby holders of Kinesis, users of Kinesis, can use their money to buy goods and services. And from that, the Kinesis system will get paid a commission. So it's just sort of like because what's actually happening there behind the scenes, it's the Kinesis system is referring a customer to one of these goods and services providers, and we'll come up with, we'll negotiate like a referral commission structure with one of these goods and services providers. If they want to be part of our system and want to receive customers from our system, then they have to give the system ultimately a commission. But instead of us just taking it and putting it in our pockets, which that's how any other organization will work, we want to share it. We share it with the collective system. So, and that's the way it works. So people are then once again incentivized to use the commercial center, because once they use the commercial center, the commission that would be payable otherwise, and it's going to be the same price, it gets brought back into the system and gets shared with everyone again. So, and obviously as we get bigger and our bargaining power gets stronger, then, more and more possibilities become available to us. So that's really like about it as far as the yield system goes. If you look on the blueprint, we really delve into it on page 29. And we've got, the different yields split up to incentivize, different stakeholder groups, different participants within the system. Please look into it, and we estimate different yields. I was going to come back to that. So, I mean, I find this important in looking at, say like the holder yield, because the holder yield it's going to attract the capital from other investment asset classes. And, even just on 20% velocity, if with the sharing of both, transaction fees and also, projected commission from the commercial center, we're looking at like a 6.28% yield. If it goes up to 30%, you're looking at a 9.42% annual yield just by holding Kinesis. No other cryptocurrency does that, right? And particularly, you can't get that in the precious metals community as well, and by holding gold or by holding silver. So we're doing like a few pretty big revolutionary things. We're putting like a yield on gold, which in the precious metals community, it'll be the only well, actually no, there's a few like gold yielding investments out there, but they're debt based, right? And there's a lot of counterparty risk, etc. Whereas with us, you buy the Kinesis currency, you hold allocated title to it. It's divisible allocated title. It's a safe haven investment. It's stable. But we've got, because we're sharing basically the economic rewards of the monetary system, then we're able to attach this yield. So we'll attract capital from the precious metals industry because we've got this yield-based system out there. We can go and do deals with like vaults, which we're doing. Bring online gold holdings out of vaults. With the strike of a pen, we can bring online billions of dollars in gold that's sitting in vaults by doing these kind of strategic deals. I mean, if someone looks at our figures, they might think it's ridiculous, but there's a lot of gold out there, and there's a lot of silver out there, and there's vaults holding it, and we do deals with vaulting providers, etc. And we can bring online these deals. We do deals with banks that, hey, look, I wouldn't want to be holding gold through like banks because you've got all the counterparty risk, but ultimately the banks are holding gold. So we do deal with banks. We give them a yield on the gold that they're holding.